All right, everybody. I am a little early. As a matter of fact, 2 hours early. I said I would be out here at 5 p.m. Pacific Standard Time. Please forgive me for coming out here now. Um, my whole day is crazy. How you doing, Michelle? Can you hear me? By the way, um, my day got messed up. My timing's crazy. How you doing? All right, excellent. So let's talk about things today, and let's summarize this market. How about bizarre? Actually, not really. This market was all over the place today. I want to cover why, what is going on, and what we can look forward to. And then I'm going to take a whole bunch of your questions here. Um, let's start off with this. Markets were off to the races earlier today. Dow Jones Industrial Average up 200 points. I think at one point it was up like 250 points. We finished down regard to the Dow about 250 points. Now, why did that happen? Well, I want to talk about that. First of all, this should not surprise you. I covered exactly what we could expect this week with regard to this market on Sunday. Actually, on Friday, I spoke about how we will continue to see volatility, and I think this is going to be the norm now, uh, probably into early next month as well. So, no surprise here. Markets trying to find some kind of direction. A lot of stocks, individual stocks, are under pressure. Boeing, for example, today. Now, why? Why did the market reverse like this? It's very simple, and I want to try to put a perspective on this that's easy to understand. And I hope this doesn't get me in too much trouble out here with some of you at least. So, the market today really started dropping when more talk came out regarding China and trade. There is a poker game going on right now. I want you to realize this. This kind of took me by surprise, and a lot of people as well. So we understand that, first of all, China has made it very clear that they are not really willing to talk with regard to this trade war. Now, today, and this is what sent stocks reversing from earlier gains, was President Trump he came out of his radio silence mode and decided to, again, this is a game of poker that's going on. He decided to say he was going to hit China with more tariffs. And you can see what happened. The market went, whoa, and the market dropped. So what does that tell you? First of all, when we're talking about China, I want you to understand something here. President Xi, his actual title is General Secretary of the Communist Party of China. Okay, they want you to think it's like a president and a president. I guess he's president, but he's the General Secretary of the Communist Party of China. But you won't hear that. And there's a reason why you will not hear it. It kind of puts a different spin on things, all right? The fact is very simple for you and me to understand here. The fact that this market doesn't want to hear about trade talk, the fact that this market made a 500-point swing from the high today on trade talks, finishing lower, tells me that this market does not believe that our president has what it takes to win. You understand? It's very simple. If the market believed that our president has what it takes to win here against the General Secretary of the Communist Party of China, markets would have gone up 500 or more points. So understand that. And let me just say something else while we are on the topic. We understand there's a game of poker being played. No doubt about it. That's why President Trump floated this out today with regard to saying, you know what, if China doesn't talk, well, we're going to hit them with some more tariffs. I don't think this is rattling China one bit. And it's not just me. It's the market. The stock market made judgment today by falling on this news. It's so simple. Just look at what's going on here. But again, this is a game of poker. We'll see who has the trump card. I don't know. But honestly, the market is almost giving us a vote of no confidence here. Now, why is it, again, that we are hearing, and I did put this together for you last week, but I want you to pay attention to this. We understand that the Federal Reserve has kept their foot to the floor since 2008, propping up the debt market, pulling stocks up with it, reinflating a housing bubble. Now, why is it, do you think, that President Trump wants this to continue? It's very, very simple. He's fighting this trade war, okay? So he needs more easy money to come into this market. I think he's going to, in fact, I'm certain he's going to get his wish, regardless of rhetoric coming out of the Federal Reserve and President Trump. He's going to get his wish. There's no doubt about it. The Fed is not going to stop. More easy money is going to pour into this market beyond any shadow of a doubt. And a lot of it has to do with how CEOs are paid. They are paid in stock. The powers that be here want this market moving higher. And you have to also step back a little further and say, well, what's really going on here? Right before we have a midterm elections, we got this caravan moving through South America. And I know I've covered this before. They're wearing designer hats, designer backpacks, designer clothing. They're carrying cameras. They're carrying cell phones. So this is staged. This entire thing is staged. I want you to think about who benefits from this in this environment. Now, we got all these gyrations here in the stock market too, again, right before the midterms. Do you think maybe it's a distraction here? Don't look here, don't look here. Of course it is. It's always the same thing. It will never change no matter who sits in that pretty White House. So when you see things like this floated out there, when you hear rhetoric about, oh, the Federal Reserve is raising rates too fast, meanwhile, they're moving at a glacial pace, and our president admitted that the Fed is way behind the curve before he decided to throw this out here. And it's incredible because the COD over there is still talking about an aggressive Fed. You got to be kidding me. But again, the Fed will keep their foot to the floor. There is no doubt about it. Trade war is escalating. And I would have to say here, the turn card, we got the turn card today with regard to President Trump playing this game of poker with the General Secretary of the Communist Party of China, also known as President Xi. Whatever. But I have to say this. It's kind of, the market definitely voted no confidence today. When this came out, because this stocks were off to the races. You saw this. But again, I don't want to read too much into it. I did explain to you we were going to see more of this volatility here. And I don't think we're done. For all I know, we're going to get a 700-point rally tomorrow, and then it's going to bleed off into the negative tomorrow. I mean, you just don't know here. There's so much going on right now. And the biggest thing, in my opinion, right now, is this trade war. And now, again, turn card comes out. Let's see what comes out on the freaking river. All right. This is like no limit hold'em here. I don't know how many of you play. Love the game. Let me touch on this before I go to some of these questions here. The U.S. 10-year yield dropped from a 3.10 this morning to a 3.08. Some bond buying in here. Dollar is getting stronger. All right. We don't want to see this. The reason why, it's very simple. The dollar is getting stronger. There's the knee jerk here. And again, not all of this, not everything we are seeing here is just a mechanism of propping up. I do believe there is some element of fear in this market, at least gauging from the emails that I get every single day. One day, I don't know when that's going to be, I'm going to take a snapshot of my email box. Your eyeballs are going to explode. They really will. Kind of crazy stuff going on. But people are getting shook up. And again, so the knee jerk into the dollar, the knee jerk into the bond market. Who knows? If this gets bad enough here, we may end up seeing a sub 3% 10-year yield. Now, my thing, what I would like to know, and I'm trying to, you got to try to get into world leaders' heads a little bit. So if it's obvious to me, it should be obvious to you that President Trump is playing poker here. Um, and again, China's trump card, as you are all well aware of, is their holding of U.S. debt. We saw what happened last time. They decided to yank the chain of the debt market. Are they going to do that again? We're going to see over the next couple of days. If we see, and I want all of you to watch this, if you start to see a sell-off here in the bond market again, that's China. Sell-off in the bond market is going to mean yields are going to spike. That's going to put pressure on our stock market. You understand? That's how they play the game. I also believe that they're shorting, or they're betting against the same bonds or debt that they are selling. It's a game. This is a freaking game. And it's a dangerous game. You got to really wonder who's really running the show. You know, it's not presidents, it's not kings, it's not queens. You know what I'm talking about. It's very simple. It's very straightforward. Okay. I wouldn't say we're so F you blank, 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 blank. It's just going to be interesting to see how this plays out here. Look, no matter what plays out here in this market, no matter how bad this gets, no matter how disgusting it gets, no matter what happens, we have each other. That's the truth. I consider every single one of you a friend of mine, and I mean that. I am your friend. There's no doubt about it. And I wish I could meet in a big place. We all would hang out together. That's the truth. So if we, again, just, adopt my philosophy, love each other, care about each other, be charitable, we'll all be better off without these inept imbeciles, because that's what they are. They're imbeciles poured into a suit. Every single one of them is, Hey, you notice I'm wearing a different shirt and tie than this morning? I had to go to an engagement earlier, and I have to go to another one later, which I forgot about. That's why I'm out here now instead of 5 Pacific. All right. Now, with that said, I'm going to pick out some questions here, and we're going to go over some stuff. Let's see. Yeah, I know. It's just crazy stuff here. Wish I could. Yeah, absolutely. All right. You all know that. I'm going to cover it real quick. World central banks will not stop. And we all know this. This is just going to continue on until we hit that wall at super Mach speed or hyper Mach, whatever the heck it is. So bet against that debt, become your own central bank. Let them play all the games they want with precious metals. Let them beat them up, squash them, whatever they want. They can do that. They can do that. But we can also play the game too. Take the opposite side of that trade. Should I say investment? But it's the truth. It's very simple. Risk on, risk off, risk on, risk off. If this market turns into risk off, okay, right now, they are trying to keep this risk on. And you have to really wonder about these gyrations here in the market with now poker being played between President Trump and the General Secretary of the Communist Party of China. We're going to have to see how this plays out. But what we do know is this environment is fake across the board. It's been rigged since 2008. And with that said, we know exactly what we need to do. It could not possibly be freaking easier. All right. Let's see. 80s music. Oh man, I grew up in the 80s. I was like a major metalhead. That's the truth. Back in the 80s, I had hair down to here. You wouldn't believe it. Sometimes I look at myself and I go, whoa. I even got a couple of tattoos from back then too. You believe it? What was I thinking, Anyway, we all do silly things growing up. But it's a lot of fun. Do I miss the 80s? Absolutely. I miss the 80s. It was a lot of fun. A lot of fun. A lot of good friends. A lot of people I miss from back then. A lot of mistakes. That's just life. You want to see the tats? I'm not going to strip off my clothes here. Could you imagine if I did that? I am wearing pants, by the way, because I know that question was going to come up. That's the truth here. Up or down for the Qs tomorrow? Who freaking knows? Who knows? Who cares? Don't even think about it. This is what you see. Look, As all of you know, for a long time now, I have been trading credit spreads. All right. So I don't really care too much anymore. If you go to my website right now, traderschoice.net, um, you will see all of my positions. I added another one today. These, hold on a minute here. I sold 120 puts, November 16th, 120 puts. Is that right? Yeah. On Visa. I didn't post it yet, but there's like 10 other positions or 9 other ones up there. Go look at these things. And you can see that even on a day like today, I don't care. It doesn't matter to me anymore. Credit spreads are the way to go in this environment. You can't do this unless you are a computer. And even then, computers aren't always right. Do you understand? It's the truth. So I don't know how people are buying naked calls, naked puts. And I don't mean naked, not wearing clothes. You know what I'm talking about here. In this environment here, yeah, sure, you can make a lot of money. You can also take a bath. So learn credit spreads. They're not hard. Platinum. I love platinum. I love gold. Silver is my favorite of all time. I think you are all well aware of that. I still stand by what I've been saying since forever, since literally time immemorial, because I've been out here for a while. Silver is the most undervalued asset that you can ever dream about or think about, other than maybe life itself or water or something. I don't know. It's the truth. So of all the metals out there, that would be the one I would hold the most of. Gold I love, platinum I love, palladium I love, all these things. These are ways to bet against the debt and become your own central bank. They've proven to hold value for thousands of years, and no imbecile poured into a suit. I'm talking about Ben Bernanke here. Take a bottle of imbecile, shake it up. You see what I'm doing? You know what I'm talking about, right? Okay, I think you got it. And then pour it into a suit, and you got someone like Ben Bernanke. That's Ben Bernanke. You got it? That's him. Imbecile poured into a suit. There's a lot of imbeciles that are poured into suits, and he happens to be one of the prime ones out there because you know this, right? Ben Bernanke said that gold was not money, and he also said that banks hold gold for tradition. You got it? I mean, maybe it should be more like this, but it's off the Richter scale, idiocy to the nth degree. And we all know about this guy, how he played out the last meltdown, kind of like Kudlow did last time too. These two guys, Ben Bernanke and Larry Kudlow, he's another one, in my opinion, that's an imbecile poured into a suit. Completely missed what was going on during the meltdown. Anyway, what percentage of our portfolio should be in metals? This is a variable. This varies, but I've said this, and I'm going to say it again. 20%. 20% is, I think, a fair number here to keep in precious metals. And I'm not saying you should even stop there, because we've never been here before, people. This is where no man or woman has gone before. It's outrageous. So continue to bet against the debt. The more they inflate, let's put it this way, this should be a directly proportional ratio between how much fiat currency these central banks want to flood the world with and how much hard assets you're holding. That's the truth. It's unbelievable. And they don't stop. They're not stopping. I don't care what you might go to the Federal Reserve's website and see their balance sheet shrinking. It's a lie. I do not believe it. There is no way that their balance sheet is shrinking. Who's buying the debt? I mean, it doesn't make any sense to me at all. We know it's not China. China's not buying the debt. You know that, right? China has not been buying our debt for a while. So who's making up the slack here? China, the second largest holder of U.S. debt. Someone else got to do it. The lender of last resort, also known as the Federal freaking Reserve. That's the truth. Anyway, do you grow your? Of course you grow your. Of course you do. Credit spreads, they're pretty simple how to set and then just look at how I'm setting the credit spreads up on my own website. You can look at all of my positions. They're right there, left side of the page. You can see if you look at any pair, let's say if you will look at Apple, for example, Apple's there, Boeing's there, Johnson & Johnson, Microsoft, Visa now, Walmart, Netflix, there's a bunch of them out there. Just look at how I'm setting these up here. Look at the positions I'm selling, and then look at the ones I'm buying. All right, that's a spread. When you see the same ticker symbol, okay, you're going to see one with a minus next to it. Those are the puts in this situation that I have sold. The puts I bought are an insurance policy. You understand? Like anything else, you want to insure your house, your car, your life, whatever it might be. You have a little insurance on there. So it makes you sleep better at night. It's the truth. So just go have a look at my own credit spreads. They're right there for you to see, all of them, except Visa, which I didn't post there yet, but I will. So you have a really good idea of what to do. Alcohol and ammunition. Probably more alcohol, although I don't drink too much. I do have a little wine once in a while with my dinner. I haven't gotten drunk in a long time. I got to work on that. I am working on that, but we'll see. Bitcoin reversal. Let's talk about cryptocurrencies a little bit here. I don't own any right now, other than Steam. I have like about $1,800 worth of Steam in my Steemit account. I have explained for a long time, and I called this beyond accurately. With regard to Bitcoin going to 5 and then 10. And then I told everyone to dump it. When it hit 20, got laughed at. People told me, oh, Greg, you're an idiot. You don't know what you're talking about. Bitcoin's going to 60 grand. It'll be there next month. What are you, stupid? Yeah, well, I wasn't that stupid. No, was I? I told everyone to sell it. Those that did listen to me, I've heard from many of you, you did okay. Bitcoin, because of the futures market, which now exists, is going to get pulled in every direction that Wall Street wants it to go. That's the truth. And I outlined this at length many times. If you're interested in seeing these articles, go to my Steemit blog and go back to when Bitcoin was at 20 grand. I outlined exactly how it would play out and why it would play out that way. And to say the least, I was 100 billion% correct. So I don't really know right now. I can't value cryptos anymore. If Wall Street would not have gotten their long, ugly hands on Bitcoin, I would be able to put a more real value on it. I can't do that anymore. It's kind of like gold and silver. What I do know about gold and silver is they are exponentially undervalued. But with regard to cryptos, are they undervalued? Let me explain something to you. They could be massively undervalued. I don't know. I just don't like the fact that Wall Street's pulling the strings here, just like they are with precious metals. But it's just so simple to me. I'm an old guy here. I don't even know how old I am anymore. I'm 53. I'm an old school guy. So it's kind of hard for me to get my head around this right now. And if I change my perspective, or I have a better understanding of how to value cryptos as we move forward, then maybe I'll buy some more. But right now, I'm kind of just sitting back and doing what I do best, and that is equity derivatives. Derivatives. You got it? All right. Let's see. Dog food. Why do you want to talk about dog food? That's funny. I don't know a damn thing about dog food. I have 2 dogs. I had 3. But anyway, hold on a second. That's just funny. Dog food. Let me show you guys something here. Let's see. That's Vega. We got her from the shelter. Let me see if I can find them. I got a couple of them here. No, I'm sorry. I'm an idiot. I don't even know my own dog's names. That's Dolly. This is Dolly. This one is Vega. This is them laying together. And this is my dog that died last year. Poor little guy. Enough about dogs. Let's see. Oh, you rescued it. You did. Congratulations to you for rescuing that dog. I tell you, I love the damn things. If I could have a whole squadron of them, I would. Anyway, we'll see how this whole thing plays out. Pot stocks. You want to talk about pot stocks? I personally, and I talked about this several weeks ago on my blog about pot stocks. I I believed at the time that they were getting there was some kind of a euphoria going on here with regard to pot stocks, and as you can see, how it's played out. I don't like to get into things that there's too much hype around if I believe they're overvalued. So I, at that time, did not buy anything. I'm not holding any kind of pot stock right now. No, I'm not saying that there is not going to be an opportunity here coming up with regard to pot stocks. I think they're getting beaten up. With that said, keep an eye on these things, and there may be an opportunity there to get in on some of that if you want to. You know what I mean? Look, for me, how can I say this without getting yelled at? I don't want to put any money to work in things that I really, not that I have an aversion to, but for an example, okay, I'm driving here in Vegas. I was on one of these streets over here. I pull up to a light, and these two guys in the car next to me, both of them driving, and I mean they're puffing away. This was some strong stuff. You could probably have smelled it from the next block. I'm not saying that doesn't happen with every other kind of drug out there, but now that this is becoming mainstream, I think I don't know. I just don't like it. I don't like any. And also, let me tell you something else. Who's foaming at the mouth? Something I despise. That is big pharma. Big pharma is foaming at the freaking mouth over the prospects of what they're going to end up doing here with marijuana. Some of it is going to benefit people. There's no doubt about it. But there's some of it that is questionable for me. So with that said, I would probably personally, this is just me, find something else to put some cash to work at. All right. Tesla. You know what? Let's talk about Tesla a little bit. I was one of those guys, and I've admitted this freely, that got duped. I got duped by Elon over there. Big time. I gave this guy the benefit of the doubt, and well, I fell into that trap pretty good. Whatever. That's life in the big city, and that's it. So I'm not touching Tesla stock right now. I have no idea what's going to come out of this guy. He's a big reefer head, isn't he? What's going to come out of his mouth? So I'm staying away from Tesla. I got sucked in totally. A lot of people got sucked into that, and I'm one of them. I admit it. Yeah, Elon he's a character and a half, but you know what? It did cost him 20 million. Not much for this guy, but I'm more than certain that he could have done a lot better things with 20 million bucks. Let me tell you something. That's really the truth. All right, let's do a couple more here before we call this quits for the lovely day. Bubbles. Yeah, everything's a bubble. Facebook earnings, no idea. They're probably going to beat, even if it's not real. That's the truth. I don't even trust that. I do not trust the way any of these companies right now are adding up their numbers or spewing it out to people. That's the truth. So whatever, it doesn't matter anymore. To me, it's like whether people want to buy it or they don't want to buy it. Or if you notice it, the way I'm setting up my credit spreads, I am putting like, for example, if I'm selling a put, I'm selling it way out there with regard to a strike price, because none of it's real. It's not real. We're trading a fake market. I can't see. This is what drives me crazy, okay? When you got the Confederacy of Dunces, you all know who and this supreme Confederacy of Dunces are those that dwell on CNBC. They talk about this market as if it's real. They talk about this market as if the debt market is normal. They talk about the debt market as if, it's okay where it is right now, that central banks have done something unprecedented in the history of the world. Oh, yeah. Well, you and me are smart enough to know that everything prices off of what's happening in the freaky debt market. So nothing is real. It's an incredible thing. But you got more and more CEOs here being paraded out on every single one of the cards over there, talking about, oh, hold on a minute, maybe the Fed's raising rates too fast. Well, of course they're going to say that. The source. They want the easy money. They want their stocks going higher. And why? Because they get paid in stock. It's unbelievable. It really is. Alrighty, my lovely, lovely friends. What we're going to do here is call it. I enjoy these things. I'm glad to be here. Sorry about the timing. For those who are going to go watch this later, I got my whole day a little bit messed up. But with that said, remember what I've been telling you. You and I are surrounded in little puffs of loveliness. And that's the way we're going to keep it. All right? With that said, I will see all of you in the morning. I love you guys. You're all awesome. In the morning, over and out.